Live. And hello, South Florida. Welcome to another live edition of the Real Estate Show. South Florida's #1 program about real estate and America's longest running daily radio show about real estate. My name is Eric Willner, and I am your host here. We are live Monday through Friday. That's 5 days a week, live at 5 p.m. That's Eastern Standard Time. Each and every weekday, we have a different agenda. We talk about real estate. These are all live, fresh shows, tons of content, talking to you why real estate is, in fact, the best asset out there, bar none. And we got a great show for you today. When I get into the material here, you're going to see we're going to be talking about a number of really neat things. One of the things that we talk about here on the Real Estate Show very frequently is about how to accelerate and build equity faster. We talk about your credit. We talk about how to reduce your debt faster. So all of those things, when you put them together, spell more wealth and a better retirement for you in the future. After all, real estate is one of the basic essentials: food, shelter, transportation. And I even like to kid around nowadays with the pandemic, maybe transportation isn't as necessary as everybody learns to work from home. But we got a great show. We're going to talk a little bit how to do that with little to no alteration to your current standard of living. We're going to talk about not having to refinance an existing mortgage in order to do this. You're not going to have to do debt consolidation. We're going to show you from start to finish how to do all this in the way that benefits you the most and the fastest way, basically turning lenders' rules back right on them. Anyway, what I'm going to do, first of all, I want to bring on my regular and very special guest. I have Don Martin, my good friend, business partner, and master of debt himself. Hey, Don, how are you today? Great, and thank you. And I know that you are en route, on the road, on assignment, out and about there. And so what I wanted to do is, first of all, I want to dive in with the Real Estate Show here for our listeners. Number one, our mission here is to educate and empower more Americans on how to own real estate. And not only how to own real estate, but how to maximize and optimize real estate and what it can do for you. There's two types of people in the world, because everybody you see is in the real estate world, but some of the people are in real estate, some of the people are on real estate. What I mean by that is those of you that are in real estate already own a piece of the pie. They have a house, a home, an apartment, a condo, a townhouse, whatever it is, but they're the owners and they're in real estate. And those are the ones that receive all of the benefits of real estate. And if you're a landlord, then you receive the benefits plus an income and a check and tax benefits on top of homeowners' benefits, including tax benefits. But if you're only on real estate, in other words, if you are paying rent, then you are the one that writes those checks to the owners of real estate, or you go to the jobs that earn the money for them to pay the rent for those properties to be owned. So whatever the case may be, this is going to apply to you. And by the way, many people think that I'm only talking to people who own properties or own mortgages. And what I'm about to explain in today's ATM, or About the Money edition of the Real Estate Show, we're going to talk about why it's important to understand, and that those people that understand interest, are destined to earn it. Those people that don't understand the power and the burden of paying interest are doomed probably to pay it forever and ever. And like I said, paying rent is really financing somebody else's dreams. And that's why we want to spend this time on this subject. And just remember, progress is not possible without change. So keep an open mind, have an open mind, so that you might be able to let an opportunity of change come upon you and be able to take advantage of some of this information. By the way, there's a number of ways of taking advantage of the real estate show. Not only are we live Monday through Friday, each day live at 5 p.m., we have our marathon real estate show on Sunday nights from 9 until 11 p.m. So from 9 until 11, we have 4 back-to-back shows. We'll stream the entire week of our shows right there on Sunday night. So whether you listen to us live on our Monday through Friday show or our Sunday night shows, you'll catch what we have. Now, if you miss any of our shows, you can always go to our website at automaticlandlord.com. That's automaticlandlord.com. And at the top of the page, you'll see the real estate show notes, and you can hear each one of the shows in their entirety, plus see the notes of what's going on there. Now, a couple other things during the week. Another way to take advantage is our workshops. And tonight, I want to tell you that tonight we have a great workshop coming on at 8:30 today. And at 8:30, that will be our big round table. This is our weekly mastermind. And on that mastermind, we're going to talk in more depth about some of the topics that we're sharing with you right now, about how to get out of debt faster, how to get into equity bigger. And so we also have a workshop each week on Mondays, at Monday night at 9 p.m. So if you're interested in that topic, then text the word equity so that I can send you a Zoom link invitation. This is by invitation only and space available only. Text the word equity to 561-861-2366. Once again, that's 561-861-2366. And on Tuesdays and Wednesdays, we do our credit workshops. So if you're interested in a credit invitation, type the word credit to that same number. And don't forget that if you type the word big table, 561-861-2366. So Don, I've been shooting a lot of stuff out there, but this all boils down to, because we're all the same, right? We all have goals we want to accomplish in life, right? We grow up, we follow in the footsteps of our parents. We want to own a home. Eventually, we want to get married. Maybe go on some vacations, college funding for our kids, maybe a second home if we're lucky to get that far, own a nice car, maybe go golfing more often, and of course, don't forget saving for retirement. But you know what all of that has in common? All of these goals put us into debt. They put us into debt, and what we find out, and maybe we find out the hard way, is that a lot of our dreams and our goals get replaced by consumer debt and our cost of living. The old keeping up with the Jones and living the quote unquote American dream. And we often think about things in terms of monthly payments, not in the price tag. And if we budget for the price tag of what we buy, we often fail to account of the true cost of what we buy and what we commit ourselves in terms of payments. Face it, we live in a debt-fueled economy. In fact, here's some interesting statistics for you, Don. Average credit card debt out there, $16,425. If you're less than that, you're doing better than the average. Many people have much more than that. The average mortgage debt out there, $180,000. The average student loan right now, and that's a hot topic out there right now, and a lot of people are fortunate enough that the student loans are in forbearance for now, but that's only for now. Average student loan totals over $50,000 on average, and the average car loan, $31,000, and that's not even what we were talking about as being in a nice car. So let's break it down, because most people are used to looking at this at the biggest debt that they have, their 30-year mortgage. And we took an example, and now, fortunately, we're at record low interest rates. And that means that we're in a huge opportunity right now, because if you look at the interest rates, sort of like the current in a river, if the interest rates are low, it's like swimming against less current. I'm not saying that you're not swimming against the current still, but in a typical example, an average example of a 30-year mortgage at 4.5%, and let's just take an average amount of $200,000. Don, that would be a $1,013 a month payment, and that's just principal interest. That has not including taxes or insurance. And think about this, because a lot of people don't. They pay that payment of $1,000, $1,013 a month times 12. That means they're going to pay over $12,000 in a year. At the end of the first year, you know how much they will have reduced that $200,000 mortgage by? No, not much at all. In fact, out of the $12,000, only about $3,000 goes towards principal. The other $9,000 goes towards interest. And when you take a step back and think about that, that means that only 73% of, or I would say a full 73% of that payment went to interest, not to reduce the mortgage. And by the way, needless to say, if you're paying rent, then this is even a more dismal picture. But we have amortization, right? And amortization says, well, it's going to get better. Well, let's take a look. After year two, does it get a lot better? In year two, same $12,000. Now, instead of paying $3,000, now we're paying almost about $3,400 and still paying about $8,600 towards interest. And do you know that after 20 years, I still owe, because the halfway point of a mortgage is not 15 years like most people think. It is 21 years, in fact, and that's how the lenders have stacked this. And this is why you're paying 73% of interest in the first year, not an equal amount or anything close to it. So after 20 years, I'll have paid $243,000 in interest and still owe another 10 years of payments and $100,000. So I'm going to pause it right now because we're up at a break. I want to take a quick break. When we come back, I'm going to now tell you we've got the problem pretty well understood. Let's start talking about what are some of the options and how the automatic landlord debt solution is a solution for you. And it doesn't matter whether you have student debt, consumer debt, credit card, car loans. If you have more than $20,000 worth of debt, I can make a severe dent in the amount of interest that you pay. I can optimize the interest rate, and I can shorten the amount of time that it takes to pay off without any of the things that I said in the beginning of the program. So don't touch that dial. You're listening to The Real Estate Show. Don and I will be back right after these words. How's it going, Don? Hey, Marianne, how are you? Marcelone. So we got Brazil is in the house today. We've got the west coast of Florida is in the house. We've got our bases covered, as we do pretty much every day, but it's always fun to see where all the phone calls come from. Hey, Brian, out in California. So as you probably have all heard also on the show yesterday in our midweek report, we were talking about the extension of the student loan deferment. We talked about the extension of the foreclosure moratorium. We talked about the extension of the eviction moratorium. All of that has now been pushed out at least another 30 days, in some cases 60 days. And there is chatter that these dates have been recommended by our new president to be extended out to September. So, by the way, and what we're talking about here, take advantage of those deferments. And let me just tell you how this could push you ahead. And welcome back. For those of you just joining us, you are listening to The Real Estate Show, South Florida's #1 program about real estate and America's longest running daily radio show about real estate. And it's all about real estate and so much more. This can touch on your retirement, your ability to accumulate money and savings, the ability to create a legacy and pass it on, not to mention having a better place to live and an additional source of income. So I'm here with my good friend, my partner, Don Martin. We've been talking about this automatic landlord debt solution. And if you're someone out there that has more than $20,000 worth of debt of any kind, could be car loans, could be student loans, could be credit cards, or anything of the sort, pay attention to today's show. And you're going to want to write down this phone number, in fact. And I'd even plug this in and save it in my mobile phone. 561 area code 861-2366, and text the word credit to that number. Text the word equity to that number, whether you're trying to build up equity or tear down credit. If you're interested in that, and what I'll automatically do for anyone that does text that word, either equity or credit today, I will send you the invitation to our Big Table Mastermind, where we're going to actually be talking about some of the advanced concepts, like the debt avalanche, the snowfall. I'm going to get to a couple of these things here in today's program. But in the first half, I showed you with a 30-year mortgage that the average person, if they were to keep their mortgage for 30 years, will pay back between 2.5 and 3.5 times what they borrowed. So a $200,000 mortgage will pay back somewhere between $500,000 and over $600,000 over the life of the loan. A $100,000 loan seems like a small loan, will pay back between $250,000 and $350,000. In other words, you bought one house for you and two for the bank. If you follow the bank's standard amortization program, if you pay the minimum payments on your credit card, student loans, or car payments. This way, this process that I'm going to tell you will help save you. You know, the average household spends 34.5 cents of every dollar to pay interest on their debt. 34.5, and that's before you take out whatever tax bracket you're in. So think about that. What if you could stop overpaying on interest? Because if you're paying 34.5% on all of your debt payments, you are overpaying interest on your debt. And imagine if you could eliminate that debt. That's what I'm talking about. I'm not talking about just reduce it. I'm going to show you how to reduce the effective interest rate. But what if I could eliminate it completely? Wouldn't that be nice, Don? Well, so here's Yep. That's exactly right, Don. In fact, they have algorithms. They have, they have all the MBAs and all the white shirts and all the the best brains in the business, in the finance world, to figure out how to stack the odds in their favor Now, what if you had access to the same algorithms in reverse? You could basically cancel it out, and in fact, in many cases, reverse the advantage. And the problem most of us have in life is that we're generally comfortable enough, right? We budgeted for the payments that we could make, and we live under the pressure, the treadmill of those payments. And we're busy enough that changing something in our lives, unless it was easy, and I'm going to show you the easy way to do this, unless it's easy to avoid also. So when it comes to making wise financial decisions, we generally take the easiest path, not the best path. So what we want to do is show you the best path. And so now I got to ask you a question, and each of you look in the mirror. If you're driving, look in the rearview mirror for a second, but not for very long. How badly do you want to get out of debt? On a scale of 1 to 5, give me a number. Is it 1, I absolutely want to be debt free? Or is it 2? Is it 3? Or maybe it's 5. No, I love financial stress. Who needs extra money anyway? Let's shift gears here and let's talk a little bit about your options. And I'm gonna speed it up a little bit as we have a limited amount of time left. But what are your options? You can do what everybody's been doing for now, is paying the minimum payment. A lot of people right now are taking advantage of these historically low interest rates. And if you can, you should, but there's a faster, easier, cheaper way than to refinance, or worse yet, debt consolidation. And some of the debt consolidation can end up costing you even more and can adversely affect your credit. You can explore biweekly payments to your mortgage. That's sort of a gimmicky way of paying extra on your monthly payment. You could make more money, but good luck with that right now. A lot of people do send extra money. Some of them do it on a programmed way through like the biweekly payments that we're talking about. Some people will send it when they can, when they get a refund on their taxes at the end of the year, or they might use some of the strategies like we talked about, the debt snowball. They might talk about the debt avalanche, and those are where, and again, I think these are interesting, and at least it creates the awareness that you want to pay off your debt. But the debt snowball, you start out and you pay off your smallest debt first. And it gives you that sense, that feeling that I'm paying more of, or some of my debts off. And then I can take that minimum payment and apply it to the next biggest debt, and then to the next biggest debt. And you've got to rely on your own personal self-discipline and methodology. And it takes extra time because you got to do all of those calculations. The debt avalanche is the opposite. I go after my highest interest rates. And so now I got to start monitoring all my statements and everything, rather than setting up a system and stopping all this guessing that it takes. And what if there was a financial GPS? So instead of, folding the map, unfolding the map, changing the direction, if it's a multi-page map, and you're trying to figure it out while you're trying to drive, imagine today's day and age, we don't do that. We just plug in our address and we follow the GPS, because the GPS is constantly recalculating. Even if we make a wrong turn, it'll recalculate what's still the best way to get to our final destination. And what I'm talking about here, the automatic landlord debt solution, and regardless of the type of debt, if you have more than $20,000 worth of debt, you should be typing the word credit to 561-861-2366. Once again, that's 561-861-2366. You can type it right now. It's not going to interrupt me at all. Type the word credit, and I'm going to get you the invitation to our workshop. Now, this workshop is not about refinancing. When that's appropriate, I'll tell you when it's appropriate, but we'll talk about that in our workshop. This is not a mortgage modification, which is tons of paperwork, does cost money, and is subject to bank approval. What I'm talking about, I don't need the bank's approval. In fact, if I asked them, they probably wouldn't want me to do it, but they can't stop me from doing it. This is not a debt roll down, none of these other gimmicky things that we were talking about. It's not an increased payment. There's no need to change your lender. There's no need to change your lifestyle. I'm going to do it right within your existing budget right now. And I'm going to show you the smart way to save money, reduce your debt, and build cash reserves and accumulate wealth. And all you got to do is text the word credit to 561-861-2366. Now, I'd like to tell you all about it and all the rest of the details, but as you can see, the music is coming in, Don. You can see how time flies when we're having fun. But text the word credit and you'll be invited to our workshop tonight, the big round table. We're going to go into depth about this. We're going to talk about a web-based money management system, a debt elimination system, and improving and employing proven banking strategies and those famous complex algorithms that I'm going to make simple because I'm going to do them. I'm going to show you how they're done for you. And it's the only interactive system on the marketplace today that does this. This has a unique ability to adjust in real time. You can do what ifs. You can check out what if I were to buy a boat? What if I were to take a vacation? What if I added more money and tried to put some accelerator, some fuel on this, if you will, and all that. Again, text the word credit to 561-861-2366 or reach out to us on our website at automaticlandlord.com. Well, that's it for today. We will be back again, same place tomorrow. Until then, thanks, Don, for coming on there. Drive safe, wash those hands, and make it a great day. Bye-bye. Thank you very much. Boom. We'll end that camera.